Let's move on to our next corporate conversation. And Ather Energy is the next company on our radar. Ather, of course, started its listed market journey very, very recently. The numbers for the fourth quarter are steady. In fact, the losses have been narrowing. The losses come down to 234 crore rupees. The revenue is up by 29%, and volumes have also been looking strong. To talk about the trends going forward, we have with us Tarun Mehta, co-founder and CEO and executive director at the company. Tarun, great to have you on. Thanks very much. I'm just recapping the full year numbers as well for our viewers to have the perspective, because even at a full year basis, I mean, the performance has improved. The losses have come down. The losses are down to about, I think, 800 odd crores for the full year versus over 1,000 crores in the previous year, FY24. So what's the trajectory ahead, Tarun? Tell us, I mean, these break-even timelines, obviously people are watching carefully, but it's also a very competitive market when it comes to EVs, right? There's a hot competition. There are incumbents who've started an EV portfolio. Then there are, your immediate rivals like Ola. So just take us through what this year looks like for you and how are you moving on the break-even trajectory?
Right. Thank you for having me here. So fourth quarter was an important quarter for us. Overall, FY25 was a pretty pivotal year for us. Our portfolio expanded quite significantly with the introduction of our family scooter Rista. And that's made a pretty massive contribution to our business. It's now accounting for the majority of our sales already. On the back of that, while revenue grew 29%, units sold actually went up almost 42% for the year. So a pretty important year overall. What really worked out well for us is the way we positioned our product, the overall premium positioning, and our ability to sell software on top of the vehicle. Both of these contributed really favorably. Our gross margins, adjusted gross margins, were up almost 1,000 bips. So they almost doubled from 9% to 19% in this financial year. And that doubling of gross margin has contributed quite immensely to the narrowing of losses.
So can you tell us about the future trajectory as well? I mean, at the PAT level, the net level, and also at the EBITDA level, when do you see black? And also in the quarter gone by, there was an increase in your expenses. Not sure what led to that, whether that was one of, there was almost a 48% jump in expenses. So just going back to the same question on profitability, tell us more.
Right. Expenses compared to the same quarter last year would have gone up, but that was more than offset by the increase in gross margins earned. So as the business scale is increasing and as we're expanding pan-India, some of the expenses are bound to go up, but they're going up significantly slower compared to the scale of revenue and margin growth. And I think both are very crucial to watch for us. So as this happens, there is a narrowing of EBITDA and PAT losses. In our case also, the journey from EBITDA to PAT is not very high because we are a relatively more CapEx lighter business. What's ahead for us? Gross margin trend, very favorable. There is a transition to lithium iron phosphate LFP battery packs that's underway as we speak. And there is a transition to a lower cost scooter platform, the EL scooter platform that we've already guided for in the coming time. Both of these will help immensely for our cost structures. Also remember, our margins are without PLI and the overall subsidy support has come down quite a lot. So in some sense, these margins are now fairly resilient, unlike in the previous years.
Okay. Got it. Tarun, I will come back to questions on when you go into black. In a bit, good morning, Prashant here. Could you give us a sense when you said, you started by saying you focus on the premium end, but now you're going into sort of, slightly more, not at the lower end, but more affordable scooters as well. Could you define in the EV space and scooters, what is how do you define premium? What is affordable? What percentage of how will this move going forward? Just some sense.
Yeah. So, see, the overall two-wheeler trajectory has been that of premiumization. If you see our scooter industry, the share of 125cc scooters has been rising steadily. They've gone from 19-20% of our industry to almost 50% of our industry in the last few years. And that's the wave that we are trying to ride. So early on, and we started at one end and we are moving more and more mainstream. Early on, let's say a few years back, our products were priced, the lowest products were in the 1.4, 1.5 lakh rupee range. About a year and a half, 2 years ago, they came down to about 1.3 lakhs. Last year with Ather Rista, they came down to 1.1 lakh rupees. So we've come pretty close to the 1 lakh rupee barrier. We're not right now looking at going meaningfully below that barrier. because we believe that does not augur well for profitability, nor is the customer headed there. Overall, in our industry, I would say the premium end is basically 1 lakh plus, and the ultra end of this is 1.4, 1.5 lakh plus.
Yeah. Okay. What So then the question is simply this: how many more scooters will you sell in FY26 as compared to FY25 in terms of volumes? If you can give us a number, and will you what needs to change? Because there's a long runway for adoption. EVs are the future. I mean, I think all that is well understood, but you need like a aha moment for it to really pick up in a big way, right? Not just for you, but for the industry. And what will that be? You're saying you don't want to go down much below that 1 lakh price barrier. You're close to it now. What will that be? But start with the volume question, Tarun, if you will.
So honestly, we are in the midst of what I believe is the fastest growing category anyways. Even the sub 1 lakh rupee category saw a lot of volume spike last year, but you will see in the last few quarters, most people are trying to move away from it because profitability there remains extremely, extremely weak. And the larger Indian consumers anyways migrating upwards. So that's a 110 to 125cc transition. I believe the majority of our industry will be more than a lakh, is probably already more than a lakh. We'll wait for formal industry numbers in the next few months. We grew 42% in FY25. And remember, that happened with Ather.
Tarun, the reason, the context is two-wheeler sales, even ICE, right? I mean, they're struggling. If you look at overall industry, I mean, just look at last month's sales of players like Hero, etc. I mean, they're sharply lower. So while, yes, I mean, the premium, and then you get to, one step away, EV scooter. So hence the question. Go on, Tarun.
Yeah, no, actually, EV is all about cannibalizing ICE first. So EV is EV is actually the real growth area in ICE anyways. So while the two-wheeler industry grows at its own pace, EV is going to see a growth many times higher. And that's what it is seeing even now. Premium remains the fastest place to grow in. For us, we believe FY26 will be a higher growth year than FY25, fundamentally because our distribution is growing in this year. Last year, in December, we had 260 stores. We've added 80 stores in Q4. And we believe that pace can continue for the next few quarters because our peers are already hovering around 700-800 stores. So the big upside for us, almost uniquely this year, is that of distribution that we can now play on because we got the right products. So we are extremely bullish on distribution-driven growth in FY26 because it's the lever that we haven't exercised yet.
Hi, Tarun. Good morning. I count myself lucky this morning. And I'll tell you why. I'm getting to speak to you thrice in the last 1 month. So I'm going to push you for a couple of numbers this time around, Tarun. As you said, you grew phenomenally last year, 42% growth in terms of volumes. But your market share still held at around 11.4%. That's more or less stable on a year-on-year basis. Given the tailwinds that you're talking about, and given that you're saying that volumes are going to spurt even this year, what is the targeted market share? In the past, you've told us that in South, you're doing quite well. In Gujarat, that market, in fact, your market share had gone up as well. Yeah. On the whole, from this 11.5%, where do you intend to head to end the year at? Please go ahead.
So you must see the trajectory. While the full year volume came out at 11.4, we began year at about 7.4, and we ended the year at about 13.3 with a consistent growth for all quarters. And that's the trajectory that we're excited about. In fact, if you see the month of April, the Vahan data will show you that we were at about 14.4% market share, plus Telangana, so almost 14.8% market share. There's a continuous upward swing in market share. A lot of it is distribution-led, and that's not stopping anytime soon. What's the rightful market share for us? So I'm looking at markets where Ather has been able to crack meaningful distribution and good brand equity. That's the South Indian markets where we've gone from about 13% market share to now about 20 to 23% market share in Q4. Okay. Or it's even Western markets like Gujarat, where we've gone from 4.9% market share to almost 20% plus market share.
Tarun, you have told me this before. From 11.5%, you'll be satisfied if you end the year at around 15%. Can we take that number on board? Or more than that, since you've already, the last quarter, as you said, I think you're at 13% ballpark. Actually, you should be more than that, right? Or where do you intend to year? Give us a range. It's fine.
I believe where South India and Gujarat is, that's the right near-term target for our business. So roughly about 20% is the near-term target for our business. Let's get there. And we're going to win market by market. South, okay. Then West, and now Central India. So Gujarat, Maharashtra, MP, Orissa, these are the big markets for us. And this is where we want to replicate the Gujarat and South India success and get to over 20% plus market share in the near term.
Okay, all right, Tarun, we'll leave it on that note. Many thanks for joining in and good luck with all of those plans. Thanks for taking up all the questions today.